Welcome to the Sheth Leadership Academy Lecture Series, a series of lectures delivered by Professor Jagdish Sheth, one of the top management thinkers in globalization and changing demographics. He is the author of numerous books such as Chindia Rising and The Rule of Three. This lecture is part one of Geopolitical Realignment of Markets.
As we know, 21st century will be driven by market economy. Last century was all driven by ideology. World War I was fought on ideology, technically speaking. World War II was definitely ideology driven. And then we had the Cold War, the rise of the communism. 21st century, however, will be less and less ideology driven and more market driven. At the same time, the domestic market gets more and more liberalized. Governments deregulated public sector enterprises. They will become more and more globally oriented, and that also is going to bring about another major change. However, contrary to the belief that the world will be actually easier to do business with because of the market-driven economy and globalization, especially with the emergence of the internet, for example, I don't believe the phenomenon is going to happen that way. That actually there will be counterbalancing market forces or two market forces, which will be primarily the geopolitical alignment of the nations or a realignment of the nations. So this presentation is all about geopolitical realignment of nations. There are four factors that are driving the geopolitical realignment of nations. The first and the biggest factor is what I call economic pragmatism. I saw this emergence of this one from the 70s roughly, but more recently we can take some examples. More and more governments seem to be driven by economics, especially in democratic nations. In other words, unless we know how to fill the stomachs of the people or the wallets of the people, income versus wealth, politicians don't get re-elected. The first major event that I observed was in Canada. We had in late 80s roughly, Brian Mulroney was the prime minister. Incumbent party has an absolute majority, but the Canadian dollar was stagnating, actually was declining. There was a stagflation, there was a malaise in the economy, market just was not doing well. And when the general elections took place, guess what happened? Out of the more than 299 majority parliamentary members, only 3 got re-elected. I've never seen the massacre of a party like since the days of Magna Carta. We think it's a Canadian phenomenon. Not true. 1992, we have the most popular president, George Bush Sr. After the Gulf War, he became more popular than any other president in the history of America, except maybe George Washington. And interestingly, in 1992, he is not able to get re-elected, in fact, because we had a recession. And out of nowhere came a Democratic leader, Bill Clinton, who was a governor of Arkansas. He was not even in the radar screen for the nomination of the Democratic Party at that time, and suddenly he became, in fact, the president of America. More interestingly, not only did he become the president, but because he turned around the economy became a massive surplus. So in his re-election, despite all of the personal indiscretions called the Monica Lewinsky affair, he survived the election. We simply said, leave him alone in the job. And he was very smart in terms of managing the market economy or the economics of the government by and large. Probably under his regime, we had more downsizing of the federal government than in any previous administration, especially since the World War II. That's just the American phenomenon, we think. Not true. The phenomenon was equally true in Europe. You think about, for example, Helmut Kohl, the longest surviving chancellor of the Exchequer. Unfortunately, he made the biggest mistake in his life of integrating the East German economy with Western German economy on an equal footing. Immediately, the unemployment rose from nothing to almost 10.5%. Germany was not used to that kind of an unemployment, especially after World War II with Marshall Plan and rebuilding of the economy. And Helmut Kohl is also gone. And what we got was an opposition party. Gerhard Schroeder came in power. Same thing happened, in fact, in France. Mitterrand government party could not have his own successor, Mr. Balladur, who actually was one of the few architects of the European Union, could get re-elected. Instead, we got, in fact, Chirac government as an opposition party, which is, again, very fascinating to watch. Same thing happened, in fact, in, for example, in United Kingdom. In United Kingdom, the same thing happened. John Major party, Mrs. Thatcher had done the complete restructuring of the economy by very aggressive privatization, very aggressive deregulation of the economy. Economy was coming back out, but it was still not there, and John Major got defeated and we got Tony Blair. this is a very, very key aspect for us to understand, because when there's a massive change of the government like that, the policy changes. And the government policy definitely impacts, in fact, the way the businesses will be impacted in terms of interest rates, for example, the monetary policy of the government, the fiscal policy of the government, such as tax policies, etc., all get impacted. So we are watching one major area for reshaping or realignment of the nations or the markets by and large has to do with economic pragmatism. A second aspect that's impacting, in fact, especially the advanced countries, is that all advanced countries are aging. In fact, there is no more population growth. So markets are becoming more mature in the process. They're all affluent nations. People are not really living off their income as much as their wealth. The balance sheet is more important than the monthly paycheck. This phenomenon has been rising over some time now. The oldest nation in the world is Sweden, for example, and they've reached a point of no return. There is no way they can reproduce enough themselves to continue population growth or even remain about the zero population growth. The second oldest nation is Japan. Japan is a very large nation. Not only it is the oldest nation, but it is also surprisingly, in fact, the highest life expectancy in the world. And therefore, in Japan, the aging is taking enormous toll. For the first time among all the advanced countries, Japan had a net decline of men population for the first time. It happened in 2004. Japan will be on a permanent decline in terms of population, and when you don't have enough people, you don't have an economic growth. Again, economic growth becomes a very key factor in terms of the realignment of the markets by geopolitical process. This is true across all aging advanced nations. All advanced nations are aging, and aging is becoming a major factor in the way economy is being reshaped. The third major factor has to do with the collapse of communism. So long as we had an alternate ideology, there was in fact a counterbalancing force to capitalism. In many, many ways, America did emerge as a de facto unilateral superpower, both economically, politically, and militarily. This is creating uneasiness in the world in some fashion, and therefore the world is using its own geopolitical alignment powers to counterbalance the rise of America as the unilateral superpower across all three domains of influence: the political influence, the market or economic influence, as well as, in fact, the military influence by and large. And that's the third major factor, that collapse of communism has also created at the same time significant opportunities for new markets that are emerging for the first time. Russia itself as a market, all of the ex-Soviet Union markets, they're all rising economies, and what to do with those economies from a market viewpoint, again, geopolitical realignment is going to influence how those markets will be shaped in the future. And the last one is probably a very recent book that is very important to understand, by Tom Friedman. As you know, Tom Friedman wrote the first book, Lexus and the Olive Tree, became very popular. He's a journalist, good thinker, and apparently his latest book, which is called The World is Flat, is very important to understand. If you look at the history of economic development or market economies, we had this nice duality out there between advanced countries and emerging nations, and there was a lack of level playing field. The emerging nations did not have, in fact, all of the infrastructure necessary, the access to capital, while they had a lot of resources like land, people, animals, industrial raw materials, etc. But what they did not have was the management talent. What they didn't have, in fact, was the capital, for example, or the infrastructure. And this gap began to rise, especially after World War II, rather than decline. Since the Industrial Revolution and the colonial expansion, the gap between the haves and the have-nots began to rise. But today, that world is totally changing. According to Tom Friedman, there is a lot more level playing field between emerging nations, such as, for example, India, China, Brazil, Russia, etc., than the advanced economies because of the internet. The power of the internet is now allowing people to do the same kinds of knowledge worker jobs anywhere in the world. So one of the major infrastructures, unlike in the industrial age, in the information age, is the internet, and internet is accessible anywhere in the world. So the world is flat means also that the next major economic powers may rise from emerging nations, and they may counterbalance this have and the have-nots, or the unilateral superpower that America has gained since the collapse of communism, by and large. So these are the four forces that are driving the realignment of nations by geopolitical process. So let's start with the journey. The journey really begins in 1987. In 1987, again, a very good thought leader by the name of Kenichi Omai, who actually is an economist from MIT, of Japanese descent, went back to his country, became the McKinsey managing director for the whole country's consulting practice, began to become an advisor, and he wrote the first book called The Triad Power. He was the one to articulate that the world may not be globalizing as we think, as it is more likely to be regionalizing. That there are three economic blocks out there, and we need to watch how the revolution takes place. The most radical thing we found by reading his book was that as of 1987, 75% of the world trade, import, export was only among these three economies. You had the traditional European Union economies, the 12 common market countries as they are called. And in this last century, we had the rise of America, mostly North America, Canada, and United States. And of course, after World War II, we had the rise of Japan in the Asia side. So if you take Japan as an economy, United States as an economy, Canada as an economy, and the 12 common markets put together, 75% of trade as one economic growth engine was only among these countries. The rest of the world didn't matter. If I put an economic map, in fact, or a trade map of the world, as opposed to population map, as opposed to land mass of the countries, India, China will be tiny little islands, and obviously countries like Netherlands will be very large continents. Fundamental change. Not only, in fact, the trade was that high, but 70% of the world GDP also was concentrated among these 15 nations. The rest of the world just didn't matter. This was the evolution taking place. This something happened, as I mentioned earlier. All these advanced countries simply have no more growth left in the economy. There is no economic growth. And as we talked about earlier, if you don't have economic growth, what happens to jobs? And if you don't have jobs, what happens to politicians? They are out of a job also. What happened to Brian Mulroney? What happened to George Bush Sr.? What happened to, in fact, John Major? What happened to Helmut Kohl? What happened to Mitterrand obviously was an indication of this new market reality taking place. So politicians had to learn that ideology alone is not enough, in fact, to really get democratic elections won. This is very important to understand because if there is a political instability in an advanced economy, what happens to capital? We know that when there is a political instability in countries like Mexico, Argentina, which happened recently, or Southeast Asia, which happened in the 70s, or countries like India, we always worry about capital always flights the nation and goes underground or goes some other place for safekeeping, as it happened during the colonial expansion and then the collapse of monarchy, for example, in 1700s and 1800s in European markets. The same thing can happen. But if the capital goes away from these 15 nations and is hidden in mattresses, or it is converted into gold. Have you seen the rise of gold prices now? It's incredible. And we thought gold will be abolished as a standard. Gold as a currency would have no value whatsoever. But people are very nervous about what's going to happen in businesses, what's going to happen in stock market, what's going to happen in my housing, where I invest my money, for example, for safekeeping. So when you have a political instability, there is always the safekeeping mechanism for the capital of the world. And if the capital goes out of this country, 15 nations, the world collapses. This led to the formation of G7, as we know, which is now G8, Russia. And I will make a forecast, in fact, that G8 actually will end up becoming G11 very soon, where they will have no choice but to involve some of the emerging large economies, as we will show you. So where is the growth? The world is looking for some form of economic growth so that people's stomachs can be filled, so that people's wallets can be filled. There are all kinds of theories basically saying that all of the religious radicalism that we see in the world, across all religions by and large, all of the problems that poor face, they're being basically brainwashed by alternate ideologies, could be all resolved very quickly, in fact, if we had some form of employment, some form of an education to the people, and if we can eliminate poverty in the world. There are authors after authors who are writing about how poverty is the fundamental problem in the world, and economics is the only way to reduce poverty, not religion, not charity, no other mechanism. So that's the kind of a message that we are going to think about, whether it's possible or not. And those kinds of economic issues are going to drive this century more and more. But as we become more and more market-driven, economics-driven, there'll be always counter-reaction in terms of the geopolitical realignment. So where is the growth? That question I have raised again and again several times. So you again do a historical analysis. Where was the growth in 1800s? 1800 was a golden era for economic growth. More jobs were created through trade and investment than any other time period. So the question is, where did the growth come from? So if you take the next chart around here, if you go back to the history, the 1800 growth was the economic growth engine from Western Europe, which were the markets served by the rest of the world, not only among themselves, but since the Industrial Revolution, most of the colonial powers, as they are called, began to go around the world in search of raw materials. This is how America was discovered. In the old days, China and India were the largest trading partners. They had more raw materials, they had more finished goods that they used to sell to the Europeans. You might remember the China Silk Route, which went through India, all over, in fact, Afghanistan, the Middle East as we know today. Fascinating. Way back in the 600 BC, these kinds of trade routes were created. So China and India were very important as nations for access to raw materials, not access to markets. Columbus was in search of discovering India. Instead, he found America, another major continent never discovered before, with tremendous amount of raw materials. Those raw materials were not only taken out back to Europe for factories, but eventually Europeans began to put factories into these colonies where they were making finished products and shipping out finished products, in fact, to the advanced countries, which was the European Union. So all the growth in 1800s came from the European countries, basically what we call the 12 common market countries or the colonial powers. Probably the most influential economists in those days were Adam Smith, who is considered the father of the modern capitalism as we know. And the next person that I feel very strongly about was David Ricardo. David Ricardo came out with a theory that was what we will call in business a win-win. It's not a zero-sum game, but it's a positive-sum game, win-win as opposed to win-loss. The idea was that even if you can make a product cheaper in your country, but if you can do with your resource, such as people, such as capital, such as land, better than what you are doing now, you should buy the product from some other country who can make it for you because they have no other choice. So I used to articulate, for example, that why should England make bread? We are too advanced for that one. We have invented Industrial Revolution. We have discovered all the technologies. We should be becoming more and more industrialized nation as opposed to agricultural nation. We should buy bread from Spain and Portugal, even though it may cost us more. And instead, we should have people employed into higher wages so they have more income to spend, more wealth to create, and therefore they should be making machines that make breads and sell the machines to the Spaniards and the Portuguese. That leads to trade. This is a theory called comparative advantage or a resource-based advantage as opposed to modern theories of competitive advantage. This resource-based view of world trade and economics and markets began to become very popular. That is how the East India Company was formed by the British, for example. Trade was liberalized all over the world. There was always an opposition, but ultimately the liberal aspects of the trade won the battles in countries by and large. And they began to outsource. The modern outsourcing thing that we talk about, where they began to outsource industries after industries to other countries, especially if they were low value add or lower wage commanding industries. So here is England, most important, powerful nation economically in those days, militarily. It was the superpower of the 1800s or 1700s, began to outsource two industries out of England in which they were dominant, steel industry and the textile industry. Both were outsourced to America because the raw materials were here. The cost of shipping the raw materials like the iron ore or coal to England, making value-add products where low wages were involved, was not considered economically as advantageous to England as, for example, the British people and their capital doing something more than making steel and outsourcing steel to America. Same thing happened with textiles. British were the dominant textile producers, but they decided again textile was a low value add activity. Why not outsource that one where the cotton was grown, which led to the first major wave of immigration in America. America had native Indians or Native Americans as we call them nowadays. They were non-educated, they were illiterate people. There was nothing you could do in terms of employing them. There was not enough population even. So here were raw materials, the natural land-based resources, especially industrial resources and some agricultural resources. So continental Europeans came and settled in America. And that wave was massive. By the way, this is the reason why America culturally is very distinctly different than Europeans. Europeans and their societies were founded by nobility and thinkers and monarchs. America was founded by working class people, just the opposite. And the two classes don't see eye to eye. So even though our genetics may be the same, our religion may be the same, our culture and the language may be the same, fundamentally, America and Europe will never understand each other, because they are founded by two different set of value systems in the society. In the US, it is founded by the working class. And they always resented the nobility, always resented people in powerful positions by and large. So you have a complete checks and balances put together, which is why the Constitution, the way it was organized, so that you have three different branches of the government acting as checks and balances, unlike the European parliamentary system, for example. Very interestingly. Not only that, but Europeans at that time had already got the taste of industrial revolution. They did not want to go back to the feudal system where there will be lifelong serfs for people who are landlords. The monarchy was gone, democracy had come in, industrial revolution was taking hold, people wanted to be factory workers where wages were more than in agriculture. Just like what you see with Mexico and Mexican people in America today. Mexican people are not just working in agriculture, they're all becoming construction workers, which is industrial activity as opposed to farming activity. Very fascinating. So nobody wanted to work in the farm from Europe as the immigrant people who came here. It was a harder work, no wages, and you are a serf, basically lifelong servant to a landlord, which is why we had to bring people over here from Africa, and the slavery movement began in America. African Americans were brought in to work in the farms, especially in places where you had a large landmass, let's say south, primarily plantations where one can grow crops like cotton on the one hand, or any kind of a paper, pulp, etc., whatever it has to do with land and the agriculture. And that's the foundation of America. Not only we did that thing very nicely, but this country had an enormous opportunity to grow for the same reasons as we see the emergence of China and India today. It's the same history being repeated. At that time, markets were not there here at all. The Native Americans did not buy these products. The immigration wave was still very small compared to the large factories. The British actually, in order to make these factories locate properly in this country, put the infrastructure, the waterways, for example, the Corps of Engineers as we call them, to create great waterways from the interior of the land to take them out into the sea, because the only highways were oceans in those days, or water, and the shipping was the major industry. Then they built railroads. In fact, British built more railroads in all of their colonial countries than ever before. So they built railroads in this country, in Canada, in India, etc., in order to have access to those raw materials or to locate the factories where the raw materials were out there. Interesting. And then the rest is history, essentially. We as Americans leveraged this phenomenon enormously. We became one of the largest exporting nations to the world. We exported more cotton than any other country at one time in the world. We exported more iron ore, more coal, because that's what this country was all about. But in order for us to take advantage of the Industrial Revolution, to work in the factories, we also did something smarter. We made education mandatory up to 12 years of high school, which is why, and by the way, nobody dreamt that you need more education than high school, at least for the masses. Only a few thought leaders, such as professors, lawyers, doctors, preachers, maybe, need more than high school education. Which is why today in this country, I cannot believe, as a landed immigrant, I had a shock of my life when I found out that the high school graduations are done today in a way as if it's a terminal degree, as if there is no need to educate more than high school. Of course, that's not the case anymore, but 150 years ago, that was the reality. And we invented a system of property taxes so that the burden of giving free education to people, mandatory but free, could be accommodated through property tax. A very unique system that we organized, unlike the Europeans by and large. Everybody contributed by having home ownership, and as you know, America, we have the largest home ownership as a percent of the population than any place in the world. Government invented a savings institution called Savings and Loan, which was primarily targeted toward loaning money on homes, and all this miracle that we created, especially in fact in the last century by and large. Everything worked. It was very interesting to watch that we made high school mandatory, 12 years of education. And most of us therefore had literate people. Unlike the agriculture age where you don't need literacy, industrial age, literacy becomes necessity, to be an occupational necessity, to work in the factories, to read and write manuals, to operate machines, etc., etc. And that's how really we grew by and large. So the 20th century, in other words, 1800s, growth came mostly from Europe. 1900s, the growth came mostly from America, and now the 21st century, the growth is likely to come only from large emerging nations. Not all nations, but large emerging nations, which means countries that have a large population, large land mass, are more likely to be the next growth engine for the world. Technically, on this chart, what you're going to see is that 1800s was the European century. 1900, in fact, was the American century, the 1900s, and the 21st century, this century, 2000 century, by and large, will be the what is called the Pacific century. So everybody's watching Asia-Pacific region as the growth engine for the world. So Europeans looked west, which was America. America looks west, which is now obviously Asia, and the world goes around back again. So we think the 21st century will be primarily driven by the Asia-Pacific markets by and large. So these are the three evolutions that we need to look up at as to where the growth is coming about. Now, this you can clearly see with a new measure. In 1994, roughly, United Nations and all world agencies like World Bank, IMF, created a new index to understand these large emerging nations and their potential. The traditional index with which we measure them was personal income. But since these countries had a very rising population growth, unlike advanced countries who are aging, was very important to understand that per capita income was declining because they were not able to raise income levels as high as producing people. The denominator was a problem, not a numerator. So they were always looking more and more regressive nations with the evolution of economies. The haves and the have-nots becoming wider and wider gap, essentially. So suddenly a new index was created, which is called the purchasing power parity. Purchasing power parity says don't look at people's income, but look at their buying power. And especially after the fixed exchange rates were abolished worldwide in 1971 by Nixon administration. And you know that was a very important event. Prior to that, when all currencies were fixed exchange to allow certainty of exchange rate risks in a trade economy. Remember, all 1800s, all the way up to World War I, trade drove everything, so you wanted to make sure there are no currency risks that you can take between economies that were trading by and large. This fixed currency model collapsed when there was a run on the American dollar in the 60s, where we had promised in America that anybody can bring a dollar and we will give back a gold at the exchange rate of $35 per ounce of gold. The run on dollar was so strong, just like a run on a bank, that there was no way this government would like to fulfill its obligation. All of the gold secured in Fort Knox would be gone out of the country, which was the backing of the currency. Currency would collapse in the process, and therefore Nixon administration announced we'll have floating exchange. Let the market decide what the rates are rather than arbitrarily fixing the rates. That liberalization of exchange rates was very important to understand, because all of a sudden, with inflation rates being very different in different economies, the currency exchange rates will be very different than your buying power. So you go to countries like India, China, Mexico, and suddenly you find a dollar which has gained much greater in value. Dollar began to appreciate after World War II, began to appreciate even more after this currency rebalancing exchange rates that came about rather than government mandating rates. And all of a sudden, in fact, you find dollar is a lot more going a lot more way in terms of shopping, in terms of buying things from emerging economies, and vice versa. Emerging economies would feel that coming to America would be very expensive. This changed suddenly, because if you take a purchasing power parity, just give an example, the currency exchange rate between India and America maybe is about 43, 44 rupees per dollar. But the real buying power may be, in fact, only 5 times difference as opposed to 40 times the difference. So this purchasing power parity basically says that if you take a market basket of goods based upon local wages, local prices, as opposed to exchange prices, what is the buying power? And can we measure economies from that viewpoint? And the new index is called PPP. And there are 2 indices with which we measure economies now. One is the GDP, or domestic gross product, or gross national product, either of the 2 indices. And the other side, of course, is purchasing power parity. And here are some startling statistics. When we put this new system together, China was already declared as the 4th or the 5th largest economy. It has been moving up steadily. And today, China is the 2nd largest economy and just surpassed Japan at the turn of the beginning of this century, and will become the single largest economy by 2020, no matter anybody does it. Nobody can stop that thing. India was declared the 5th largest economy and now has already become the 4th largest economy. It surpassed Germany at the beginning of this century and is likely to become the 3rd largest economy by 2020, for example. So here are some numbers. The new measure, purchasing power parity, if you analyze from that data, and my data here are 2003. One can update the data. These are available annually from International Monetary Fund, for example. All of the government agencies have this data pretty much. US is still leading at $10 trillion, but China has already risen to $6 trillion 2003. Think about 2005 and onwards now. Japan is now 3.5 trillion, India is 2.6 trillion, etc., etc. This is now very strongly backed up by a new report by Goldman Sachs called the BRIC report, B-R-I-C. B stands for Brazil, R for Russia, I for India, C for China. Based upon a large econometric study looking into the future, next 40-50 years, interestingly, they have made the forecast that these 4 economies actually will contribute more growth going forward and will surpass all of the advanced countries' economies put together, which means the next set of markets, not just the raw materials in the colonial days, but next set of markets will come from countries like China, India, Russia, and Brazil. The BRIC report is B-R-I-C, but the evolution seems to be C-I-R-B. China is leading the way right now. India is right behind. Then we think the third nation is going to be Russia, and the last one that will create an economic growth will be Brazil. So these 4 nations have become very strategic. Of course, there are other nations with large populations, such as Mexico or Egypt, for example, or Turkey or Indonesia, but they are sort of in the background in some fashion. These 4 economies are going to be the economic growth engine, and everybody will be watching about what happens, because the fundamental theory is that whichever becomes a large economic power also ends up to be a large military power and gains to have a large political influence on the world economy by and large. So the economic power is going to begin to shift, political power is going to begin to shift, and the military power is going to begin to shift. And that is the very exciting journey we are going to go through in the 21st century. So how are we managing this integration between the have-nots nations, where the future is there out of necessity, versus the have nations who have no choice? It was one thing during the colonial days to do things nice to the colonies. You need to reduce their poverty. You cannot behave like in a feudal system, especially after World War II. We gave independence to most of these nations. That's not the theory. It is out of sheer necessity that the advanced countries will have to respect the large emerging nations as potential markets, not just raw material extraction. Fundamental change in the attitude with which you look at the large emerging nations. So here is a model. The old model of dealing with emerging nations, or less developed economies, we used to call them LDC. That word is out. That's a dirty word now. We are all calling emerging nations. We used to take a colonial approach, and we had a military angle behind strategic investment, such as Malta, for example, such as parts of Asia, where you could make a military base where you can therefore serve the rest of the world through, let's say, Navy, the British Navy. Navy was the major powerful force, then eventually, of course, the military, army, and nowadays the Air Force. Air Force has become the strategic weapon through the air, and of course the missiles and all the stuff we talk about. That colonial model is gone. Neither the ex-colonies want that model, nor can we sustain that in a more open democratic society. So the new model is what we call economic integration. The relationship will be primarily teed up not from a military or a political viewpoint as much as from an economic viewpoint. Fundamental shift. Markets will be the driver in regard, but it will be the relationship between 2 nations looking at it from an economic self-interest viewpoint. And rather than owning these colonies, you basically make economic integration by enhancing trade between nations through bilateral or multilateral trade treaties, trade agreements that you sign. And of course, once the trade grows, investment follows naturally. So all 4, 5, 6 flows come together. Flow of products, flow of money, flow of people, flow of communication, etc., etc. And this is how you create an economic integration as opposed to a colonial integration, which is a very different model. And that's what we are watching as to how in this century is going to evolve. Here is the first thing that we see. By the way, what are the flows? Let me just get into that first. I have identified as many as 10 different flows that are likely to happen by geopolitical realignment, and these flows will be stronger within the bloc than between blocks. And ultimately, we will conclude that the world is not going to globalize, but the world is going to be regionalizing, and there will be 3 regional blocks as 3 major market magnets, and everybody will be attracted to those magnets somehow or the other. There will be only a few nations who will remain non-aligned, neutral. Most nations will have to decide which bloc they want to belong to. And here are the flows. The flow of products, which basically is, made in China, is everywhere in America right now. Made in America products, are all over the world at the same time, like the Dell computers, for example, and the Microsofts of the world. Flow of money. Money flows easily among these countries. That's the second flow. Third one is a flow of tourism. Tourism begins to rise because we want to understand those nations. As you know, we have a very large tourism from Japan in this country after World War II, when we began to have an economic integration with Japan economy and the American economy. We have very large tourism from Europe because after the World War II, we invested into Marshall Plan, reconstructing Europe. So Europeans were very interested in knowing America. We were interested in going to Europe at the same time. So tourism is a third major flow one has to watch. Fourth one has to do with services. And since advanced countries are more and more services-driven economies, you can see most services exported out to emerging nations and emerging nations exporting products to America or to all these advanced countries, the 15 one we talked about. So for example, if you today look into the management consultants, if you look at the ad agencies, if you look at the capital markets, merger acquisition, investment bankers as they are called, are mostly American, European companies racing into the emerging markets. And if you see most of the products, they're all made in India, made in China, made in Brazil, all of the emerging nations by and large. So flow of services is a third thing one can watch about how this realignment is taking place. Fourth one has to do with education. How many students and faculty are into each other country? As you know, at one time, the British had the largest number of foreign students because they're the largest, in fact, the colonial power in the world. Sun never set on the British Empire was the old slogan. People from all over the world came to England to study law, study culture, study arts, literature, whatever it is. Then, of course, we took that market away from England, or we expanded the market at least. Today, that flow is very interesting to watch, the flow of education. How many students are coming to study in a given country from some other country? Technology is another major flow. This is science and technology. That begins to flow between nations as we have more joint ventures, more R&D work is done. For example, today, there's a huge flow from America into India. More and more outsourcing is done, not at the call center level, the low-end value add, but more at the scientific level, where the scientists and the PhDs are all, in fact, putting their laboratories from America into India, and the Indian companies are putting their laboratories into America, for example, very interestingly. Then you see the flow of culture. We want to understand each other's country's culture. So today, for example, we got enamored with sushi at one time. Before that one, of course, we got enamored with, in fact, Korean food when we had an alignment with Korea. Next one is likely to be, obviously, Indian cuisine, In fact, in England, surprisingly, the most convenient popular food is no longer fish and chips, but it turns out to be Indian curry. Think about that one. British eating regularly, daily almost, Indian curry. That's the kind of a flow and the integration that takes place by and large between economies. So culture is another thing that we watch. Food, shelter, clothing habits of the people who adopt soon. I have a theory here which is very radical. I found that in the US, when the immigrants come to America, it is not the immigrants adopting the majority behavior, but the majority emulating, would you believe, imitating the minority behavior. I find that to be true in music. I find that to be true in food. I find that to be true, in fact, in clothing, etc. So next fads and fashions in clothing will come from the next economic partners that we discover, kind of a notion. Media and entertainment the same way. And in fact, you have seen this very clearly. For example, more Pulitzer Prizes are won by Indian writers, for example. Indian movies are becoming mainstream. They're no longer ethnic movies for ethnic markets, but they're becoming mainstream. And you're going to see that kind of a fusion or convergence of some sort taking place. Of course, military alignment creates more military joint exercises between two countries. I'm watching the military alignment that's taking place with European Union and the flow of military, the German military working with the Italian military, working with the French military becomes a very interesting way to think about the European Union as it is evolving. And of course, ultimately people settle into each other's territories. They become citizens. They put their roots there, coming as immigrants. We are watching that trend. These flows are likely to be much faster, much greater in European Union, the 12 common market countries that we talked about in the earlier chart. And the reason is that there's a huge population density. They're all mature economies, by and large. And not only that, they're physically proximate, and there's an infrastructure to travel back and forth by railroads or by, in fact, automobile, by highways, or you can fly. So we see this economic integration or assimilation among Europeans rising much faster than it is between, let's say, Europe and America, or America and China, America and India, etc., etc. By the way, this is nothing new, because after World War II and the independence India got, for example, India, I don't know whether you know, but really was a country. 2/3 of the geography was occupied by the British. All of the colonial powers had left, but that additional 1/3 geography had more than 240 kings, emperors, whatever you call them. Think about the total country. Total country would have been as fragmented as the tribal jurisdictions in Middle East we used to have in Saudi Arabia at one time, or in fact in many African nations. Even though we have formed nations, the power is really in fact with those tribal chiefs by and large. That's how India was, till British organized them into a nation as we know today. And even then we had more than 200, but in India, after the independence and democracy and the new constitution, we have seen a huge amount of product mobility, money mobility, people mobility, culture mobility. India is like Europe, but it is becoming more and more a nation standing by itself. The ethnic identities of subcultures is giving way, in fact, to the national identity by and large. And we see, therefore, the European Union evolving very similar to India in the process. So let's look into the evolution of these three blocks. The first block really to get formally organized was European Union. This was the dream of United States of Europe by Winston Churchill. After World War II, he believed very strongly that if we make more economic integration among these colonial powers, we will never go to war with each other. His dream was to create a European Union. People talked about it all through the 60s, and finally, out of sheer necessity, in the 80s, they created what is called the EC92 agreement. In 1987, there was a formal agreement signed by 12 nations to say, we will liberalize our markets. The physical barriers of movement of those 10 flows we talked about will go away as much as possible. By 1992, we will become one single market. Because one single market together, we will be as big or bigger than America, and we can counterbalance, therefore, that divided we are too small, we don't have economies of scale, we have too many factories, we have too many labor laws, etc., etc. How can we organize into a single market? Remember, market-driven is taking over more and more from ideology-driven nationhoods, by and large. And that was the game plan. And they came out very, very good architecture. The first major change in European Union, as you can see, is the currency unification. Because if you have free flow of those product services, you need to make sure there is no currency hedging that takes place. Only exception, of course, is United Kingdom with the British pound. And eventually they may get co-opted into converting that into a euro. It's a matter of timing and a political, in fact, a horse trading of some sort, political give and take by and large. 3 additional nations joined into the union. They're called EFTA nations. Sweden, for example, Norway, and Switzerland were the kinds of countries that joined. This is very important to understand because in this European Union, smaller the nation and more capability, a resource-based capability in any one industry, whether resource is technology, resource is people, resource is land, resource is animal, resource is capital, whatever it is, you now have access to a much larger market. So I'll give you some dramatic examples. Company by company as opposed to nation by nation. Here is Finland as a nation, relied heavily as a gateway to communist bloc. Collapse of communism comes in. Finland wants to figure out what to do with its nation. Suddenly it realizes that there's a company called Nokia, which was a highly diversified gas and oil exploration company, had a little technology which was primarily a cellular technology, begins to bet its future strictly on cellular technology. Nokia looks at the whole GSM, which is a common standard in Europe, as a big market opportunity, and the rest is history. While America invented cellular technology, we commercialized it successfully. Motorola led the handset business. Companies like Lucent and Nortel built the infrastructure. Guess what? Nokia became number 1 in handset because of access to a large market. Finland and Sweden have the largest amount of core competency in paper and pulp industry, and they will take over all paper and pulp industry throughout Europe, would be another major forecast that one can make through this geopolitical realignment of nations. So European Union is still trying to balance those. How do we shift factories from one location to the other? How do we make countries specialize using this comparative advantage theory, not competitive advantage, but resource advantage? What is my comparable resource advantage compared to other European countries? So Switzerland, as you would expect, is very good in private equity market, very good in capital markets. Can they take over the private equity capital market all over the world? Germany is very good, of course, in chemicals. Germany is very good in insurance. Germany is very good in banking. French are certainly now specializing in the aerospace industry with the evolution of the Airbus as a major global player. This is the restructuring of the European Union taking place right now. America watches this trend and gets somewhat concerned that we will be left behind, especially after the energy crisis of 1974. We had a malaise in this country, we had a huge stagflation. Global competitiveness was used as an argument politically. We were losing market share to the Japanese car makers, for example. We lost the whole consumer electronics sector to the Europeans and all this stuff. To the Koreans, the Japanese, the Europeans. Europeans were coming and buying out companies very cheaply in this country at that time, especially the French companies at that time. Alcatel making a major presence around here. Group Schneider buying out one of the largest companies called Square D, just went on and on. And this led, in fact, to the formation of what is called the NAFTA. Can we have an economic integration between Canada, America, which is the largest trading partner, the largest partnering I have ever seen is that one, $400 billion of trade between those two countries, Canada being such a small nation otherwise, 25, maybe 30 million people at best, very large resource, large landmass, but not too many people. And that is having a huge economic trade. Can we add Mexico? And can they create an economic miracle for our bloc kind of a notion? Before I continue the journey on the NAFTA, let me go back to European Union because the realignment in European Union is geopolitically based as opposed to strictly market-based. The most largest economy is Germany. German economy, the next largest is the French economy, the Italian economy, and the British economy. You see suddenly a very strange geopolitical alignment between the French and the Germans. Think about French supporting anybody, let alone Germans. If you look at the history, it makes no sense. This is the economic pragmatism I was talking about. German economy is the anchor, therefore euro is anchored to the Deutsche Mark. French are supporting the German. So you see this interesting pair of Gerhard Schröder on the one hand and Chirac on the other hand becoming buddies essentially, unthinkable at one time. And neither of them want another country to be in the power base, which turns out to be United Kingdom. Mrs. Thatcher wrote a wonderful biography, autobiography, where she complains about this collusion taking place, that the British are excluded in fact, which is why she was opposed to any kind of an economic integration between United Kingdom and the continental Europeans. Which is why it is much harder today whether the continental European, United Kingdom companies to cross over the English Channel to buy out any of the large European companies, merger acquisitions, but it is very easy for the British actually to come into cross over the Atlantic and easily buy out companies in America. In other words, the British are coming again. Have you seen the private foreign investment of British firms in America? It is one of the largest. As the Japanese began to take their capital out in the 80s, the British capital has come in. The Dutch capital is still there, the Netherlands people, but it's plateaued by and large. They are investing their capital back into European Union, which is becoming more exciting for them. Fundamental change. So politically, economically, and even militarily, the UK economy is in isolation from the continental European. However, I'll make a forecast that with the recent re-election of Tony Blair, mark my words that the UK also will actually align with the continental Europeans going forward, as opposed to continue its very strong alliance with America. The future of British economy lies with continental Europeans more so than with America going forward, is my forecast. This has a huge impact on the markets because each government has to agree whether you will be invited to do business there, to buy out a company. You saw the major battle that took place. Vodafone, which is a British firm, wanted to buy out Mannesmann, which is a utility company which had a wireless technology. And not only Gerhard Schröder personally said, no, don't do it, unions intervened. This is unthinkable. It's not a market economy. So you will see more and more of those issues that is taking place. And European Union, driven by continental Europeans, will begin to challenge America. I've written a paper called The New Europe, Friend or a Foe. My view is that America is stuck in its memory about Europe as if it is still the same as World War II. Europeans should be grateful to us what we did for them. We revitalized the economy. Europeans are beyond that. 60 years is a long cycle, 2 generations. And they want to be on their own. They don't want America to tell what to do anymore. And the first sign I forecasted was in 1990. Think about how many years ago was that, when I suggested that for the first time in NATO alliance, the Europeans will basically say, why should the NATO commander-in-general be an American? Who said that? And as you see now, NATO commanders are not coming from America anymore. They're coming mostly from continental Europe, including UK for a while, as sort of the compromise candidates in the process. In fact, they will push America out of the NATO is my forecast. NATO will not be the traditional NATO that we know, but will be totally different. That's the European Union architecture. Combined together, it is the largest market for many products except China. It has already surpassed in industries like automobile, appliances, a cellular telephone, no matter how we look at it, to America. Divided, it was a highly fragmented market. United, it is a one single market. And by the way, currency unification is so radical. I think in 2003, January, they started a currency. Today, Italians have forgotten the lira, the French have forgotten the French franc, for example. The Germans have forgotten the Deutsche Mark. It's fascinating to watch people's attitudes changing. Everything is in euro. Euro is a major unifying force among people. It's the language of the currency, the money language, which is now becoming a common language in Europe, essentially. The English language may not become the common language. It may be the de facto language. It's the second language of the European Union, but the currency language is already in place. We'll talk about that a little more. Back to the story, we responded with NAFTA. Our trade with Mexico has grown. It is almost rivaling the trade with China. Think about that one. Slightly about $200 billion and properly balanced. We export as much to Mexico as we import. And what are we doing? What are these exports and imports? If you look at the China-US model, it is very different than all the trade theorists had talked about, including Ricardo's thinking. For the first time after World War II, with the expansion of the American enterprises all over the world, more trade was within the same company. It is called the intra-firm trade as opposed to inter-firm between companies. You have a General Motors, for example, which will now suddenly make components like an engine in Canada, will assemble the car in America. So when Canadian engines by General Motors within the company are shipped out from Canada, it is called an export from Canada. It is an import in America. We do the assembly value add. As it goes back to Canada, it's an export again. In this model, you break up the vertical integration of doing everything in one location depending upon what the costs are. So today, we are exporting to Mexico a lot of industrial raw materials, and we are doing the assembly there. So we send out components to make appliances there. We send out components to make automobiles there, for example. We send out components to build PCs, etc. Because the labor is the key differential advantage Mexico has or America. So they assemble there, and guess what happens? The assembled product comes to America for consumption. By the way, surprisingly, in this balanced trade, we export as much to Mexico, raw materials, components, etc., as we buy finished products from Mexico. Guess what? Who is making more money? My analysis shows you that we are making more money because at the raw material level, margins are much higher than they are at the assembly level. Not only that, but because we are the next big employers in Mexico, guess what we do? We negotiate the labor and the wages properly. So actually, Mexico may not be benefiting as much in this outsourcing as we thought. We are finding the same thing about Indian call centers. In fact, Indian companies are telling me that they can't make money on Indian call centers anymore. They're looking for even cheaper labor some other place, and it is no longer Philippines. Would you believe it is no longer Ireland? It may be China, or it may be, in fact, some African nations, or it may be Eastern European countries. We just don't know. So given that, we have to watch this bilateral trade that takes place within a bloc. But the European Union is the largest trading partner within itself. It is about $1.5 trillion. NAFTA so far is just about $900 billion trade among these three countries by and large. And of course, Mexico is a large population, so it can add enormously. And the notion was that if we can ship the jobs there, Mexicans will not come to America, which I don't think is going to happen because we also need labor in this country for many, many projects that cannot be shipped out like construction. You cannot do construction in Mexico unless you do prefabricated housing, prefabricated factories, etc., and then you simply do the assembly over here. But even there, you need the labor for that. So labor will continue moving around the blocks, within the blocks, especially by and large. What about the Asia side? What about Japan? Japan began to silently incorporate its economy, integrate with its neighbors, rather than relying on America, or in Europe, where there was obviously a strong resistance to the Japanese invasion after World War II. They decided that America was not as friendly anymore. In Japan, as you know, there was a very controversial book written called Japan That Can Say No, in the bracket, to America, written by the co-founder of Sony, Morita was his name, with a very extremely right conservative politician. Became a controversial book. But Japan began to say that, look, America cannot dictate to us everything we do about our currency policy, monetary policy, about our economic aspects. We have our own economy to manage. So they began to divest their investment into US, especially into office buildings, into Hawaii, the real estate side, as well as companies' investments, and began to shift that investment to the ASEAN countries, as they're called. ASEAN country is an open market, free trade agreement among now as many as 13, 14 nations. Began with about 8 nations, such as Singapore was the key, Singapore, Indonesia, Thailand, Malaysia, Brunei, etc. And it's growing now more and more. And they began to put factories there. Labor was cheap, these countries needed some employment, and that alignment took place. So the largest foreign investment in the ASEAN bloc, such as Philippines, Thailand, was no longer the American investment, which was since World War II. We were the victors, we had bases, military, etc., and tourism, but it became the Japanese investment, which is fascinating because here are Japanese who committed as much atrocities in Asia as the Germans did in Europe. There are still scars in the minds of the people. People are still living there. But today you see Thailand welcoming Japanese tourists. This is a very important point to realize because Asia market is the most pragmatic. Only religion that matters is money. There are no deep-rooted religious beliefs that come in the way as ideologies to counterbalance. We as a bloc, NAFTA is probably the second most pragmatic. We have some rules, regulations, religion, ideologies coming in the way, but we are very practical at the same time. On the other, Europeans are much more traditional that way. They have value systems country by country going thousands of years. And therefore, the economic integration is going to be a lot slower and more painful in the European Union than it will be in Asia, which will be the fastest economic integration. This is the first round. We see the emergence of 3 blocks. Japan investing more and more into smaller countries in the neighborhood, ASEAN bloc, all through late 80s and the 90s. We expanding into the NAFTA architecture with a tighter economic integration, more flow, free flow of products and money between Canada, US, and Mexico. European Union through currency unification, all of the customs and trade barriers, all the thing is gone out. Basically, you can travel freely now, in fact, with a European passport anywhere in the country. You can exchange your money, etc. Free flow of those 10 things we talked about. Not all 10, but 4 or 5 key ones. That's already happened.
Thanks for listening to this lecture, part 1 of Geopolitical Realignment of Markets with Professor Jagdish Sheth. For more about Professor Sheth and the Sheth Leadership Academy, visit www.shethleadershipacademy.com.